As we look to what may still be ongoing by this time next year, there are also ongoing wars we have to consider in Israel with Hamas, Ukraine versus Russia. And obviously in Congress, it's not just a matter of getting members of the military promoted, it's a matter of providing aid and funding, which is a subject of much debate. General, if they can't get around to figuring out a compromise on funding quickly, what's the implication?
Well, now you're addressing the real readiness issue, what really has a challenge to do with our operational capability. If we don't have airplanes, or the airplanes that we have are too old to be effective, if we don't have enough ships, if we don't have enough weapons systems for our troops, that is going to have a significant effect on readiness. And that's less about what Senator Tuberville is doing with promotions and far more to do with both the House and Senate not providing enough to the procurement accounts and the investment accounts of the United States military. That will make a difference. That will provide an incentive to our adversaries to take more risk than they otherwise would have taken if they know the United States military is not the premier military in terms of not only troops, not only in terms of training, but if they don't have the tools they need to defeat or deter our enemies, that has a much larger impact than the promotion rate inside the U.S. military.
General, we appreciate the insights and thank you for joining us on this Veterans Day. We don't always have the opportunity to say thank you for your service, so be well this weekend, and thanks for joining us on Bloomberg. I'm Joe Matthew alongside Kaylee Lyons. Let's get you up to date on things world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The White House says President Biden and Chinese President Xi Jinping will be discussing a range of regional and global issues when they meet next week in the San Francisco Bay Area. Today it was announced their meeting will be held on Wednesday. Gordon Chang, author of The Coming Collapse of China and an expert on U.S.-China relations, says there's little that the U.S. will gain in this meeting.
I don't think the President Biden-Xi Jinping meeting will be productive from an American point of view. We've been talking to China intensively for more than 3 decades. And during this time, China's behavior has only deteriorated across the board. So I don't think there's anything that Biden can say that hasn't already been said.
Gordon Chang says the Chinese need a lot from the U.S. right now because their economy is ailing and there's pessimism among the public. He says Xi will likely ask Biden to signal to U.S. businesses that they should remain in China. Former President Trump's classified documents case is set to go to trial in May. The judge in the case today denied Trump's request to delay the trial until after the presidential election. She did leave open the possibility of pushing back the trial date at a later time and will consider the request when the parties meet in March. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, and NASDAQ very close to session highs. S&P on track for another week. And right now we have got the S&P trading at 4406, up by 1.4%. Stocks are extending their November rally. S&P hitting that key 4400 mark, seen by some chartists as a resistance level that could pave the way for more gains. Again, the S&P up by 1.4%. The Dow is up 321 points, now up 1%. The NASDAQ Composite Index up 256 points. That is a gain right now of 1.9%. The 10-year yield, 4.62%. The 2-year, 5.05%. Spot gold down $23 the ounce to $19.35. A decline today of 1.2% on gold, while West Texas Intermediate crude is at $77.16 a barrel, up now by 1.9%. Consumers' long-term inflation expectations increased in early November to the highest since 2011, while high interest rates and concerns about the economic outlook weighed on sentiment. Joanne Shu is Director of Surveys at the University of Michigan.
Consumers' views of their own personal finances and their own labor market prospects haven't changed a whole lot in this month. That being said, we are seeing some deterioration in consumer expectations over the unemployment rate. People are expecting labor markets to weaken a bit. Income expectations are not nearly as strong as they were in previous months. So it's really not a great sign that consumers see an acceleration in inflation as well as potential weakening in labor markets, which has been our main source of strength in the economy.
And you can hear more of that conversation with Joanne Shu of the University of Michigan on the Talks podcast. You can download it wherever you get your podcasts. Apple is set to challenge the EU's fresh crackdown on big tech's dominance in the first of what is expected to be several appeals against the Digital Markets Act. Apple shares, they're advancing along with other big tech names today, up now by 2%. Recapping, stocks are higher, just about the best level of the day right now, with the S&P at 4407, a gain of 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
A victory lap for President Biden, along with the UAWs outside Chicago yesterday at a reopened Stellantis plant for a rah-rah celebration on the contracts that were struck with the big three. I'm Joe Matthew alongside Kaylee Lines. The question is, who's next? Because Joe Biden loves this idea of Tesla organizing, maybe Toyota, and the latter might not be that far-fetched when you see the headline from Honda here. I don't know where this is going. What do you think?
Well, clearly there seems to be some kind of domino effect here, because Honda today, according to our reporting, is giving U.S. workers an 11% raise. And you know who else noticed that Honda was doing this? President Biden did. He tweeted about it, posted on X.
You're welcome.
Union auto workers own this victory, he says. And then he goes on to say, I meant it when I said deals like the UAW's historic agreement will change the game for every worker in America.
And Elon Musk says, oh, yeah? You know, he took the blazer off, put a UAW big bright red T-shirt on for the party yesterday. Here's Joe Biden.
Instead of lower wages, you want record gains. Instead of fewer jobs, you want a commitment for thousands of more jobs. Instead of less involvement and investment, you encourage American automakers to invest $40 billion in American auto industry beginning now. $40 billion. And then we're going to shut down. Remember my other guy? Yeah. And here's the difference. When you're in the middle of a fight, I stood and others stood with you shoulder to shoulder on that picket line.
He did, and became the first president to do so.
Yep.
And that's where we begin our conversation with David Weston, who joins from World Headquarters in New York. Of course, the host of Bloomberg Wall Street Week, but also a man who grew up in Flint, Michigan, and knows a thing or two about the UAW. His dad was a member, and I think you were too, David. Welcome back. We missed you last week. I wonder your thought here on the momentum that seems to be created. And I think we can argue it goes back to the UPS deal with the Teamsters.
Yeah, I did belong to the UAW for one summer when I was working the assembly line at Ford. But it strikes me, going back to what you and Kaylee were talking about, Joe Biden, the president, sort of wins whether there's organization at Honda and Toyota or Tesla or not, because they're going to have to raise their wages to avoid the organization. So he sort of has it both ways that way. Sean Fain needs more organization. Joe Biden doesn't necessarily need more organization as long as he can say, look, you got more wages because of me, because of the spillover from the UAW.
Yeah, and he already has plenty of fodder for campaign ads for 2024 of him at the picket line, of him wearing his nice red T-shirt yesterday. And, you know, he wants to flex his union chops. He now has ammunition to do that. But as we know, David, a lot of this conversation with the auto workers was not just about what kind of wage gains they were getting, but it was also what their role looks like in the future as we're transitioning away from internal combustion engines to EVs, and also just technology is changing. And I know technology is a subject you're going to be focusing on Wall Street Week tonight.
Yeah, we do have Nobel laureate in economics, Michael Spence, on, who's done some work on AI. But just to that point, one thing I think that we may have underestimated coming out of this settlement of the UAW thing is that I think both sides increasingly are embracing the notion that we are going to have EVs and that there can be a role for union workers. And that's part of what Michael Spence has worked on. He's got a piece in Foreign Affairs just this last issue, in which he says, look, everyone's talking about whether we're going to have more jobs or fewer jobs with AI. Is it going to take all of our jobs away? It's the wrong question, because we don't know, and to some extent it's up to us. And the question is, how do we use AI the smartest way? And he thinks it's to complement workers rather than replace them. Here's part of what he had to say to us.
Than the average human on the LSAT, the law school, the aptitude test. And we do it, you know, that's okay. But there's a very small step from that to thinking that, you know, well, once the machine passes the human, why don't we get rid of the human? And that leads you to what you might call the automation bias. And that I think we do have to resist. And that's not government, that's not business, that's not any particular sector. It's just the way we think about it.
Thank you very much. We missed the very top of that tape where what he was saying is we pay attention to the so-called Turing test. Can a machine do what a human can do? He says that's the wrong question, because that's assuming we're going to substitute machines for humans. And in fact, the smarter way to use AI may well be to be sort of like really fancy digital assistants that help humans do their job much better. And there's some research, early research already that suggests that that is very effective to use AI that way.
And does that cut across all industries, David? I mean, it's easy to make the argument for increased productivity. Is it always easy for some jobs, like clerical work, for instance, busy work that might actually be replaced by automation or by AI? Is it that easy to say, well, I'll keep our jobs?
Well, I don't think any of this is easy. Certainly, I don't understand it. But what I found interesting, what Dr. Spence was saying, is he was saying that there are a lot of those jobs, including in manufacturing. Go back to autos. He believes in manufacturing there can be applications of AI that will enhance what the workers do. And then instead of, as has happened in the past in digital revolutions, you sort of push the middle level workers down into waiting tables and things like that, you can actually enhance their jobs so that they actually move up the food chain rather than down the food chain, because they have the assistance of AI.
Wow. I love that.
That's super cool, and I'm looking forward to hearing more from your conversation with the Nobel laureate, Mr. Spence himself tonight. David, who else you got? We got about a minute left for this promo.
Okay, we've got Afsane Beshlos from Rock Creek right there in Washington. She came up to visit us talking about investing in climate in China. A lot of people were talking about that. She says not so fast. And then we have Melissa Carney, also from your neck of the woods, from University of Maryland, reporting on what they came out of the Aspen Economic Strategy Group about to really try to fix the economy, and particularly, like this, deficits.
Okay, forget Wall Street. It's about the DMV on Wall Street Week tonight.
Underscoring the fact that David needs to come down to Washington a lot more often. I mean, it's been months, I think. Well, so let's make that happen, please. Imagine that, the three of us at the same table.
A dream come true.
As for now, it's world headquarters in New York, and that's, of course, where David will hold forth with Wall Street Week, starting at 6 p.m. Wall Street time after Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, along with Kaylee Lyons. Thanks for being with us on the Friday edition of Bloomberg Sound On. Find us on YouTube. Search Bloomberg Global News. Some final thoughts ahead. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Honda says it will be hiking the pay of some of its U.S. employees by 11% following the UAW's historic contract victories at the carmaker's unionized Detroit competitors. Now, this was according to a company memo that was seen by Bloomberg. A Honda spokesperson did confirm the pay raise. Right now, ADRs of Honda Motor, HMC on the ticker there. They are trading lower, actually higher now by 2.1%. You can add Wynn to the settlement list. 3 Las Vegas casino companies have now reached labor deals with the city's most powerful hospitality workers union, ending the threat of a strike in one of the nation's hottest tourist destinations. And with more on the story, here's Bloomberg's Gina Cervetti.
Charlie, Culinary Workers Union Local 226 said it reached a tentative agreement for a new 5-year contract with Wynn Resorts. The deal means 5,000 workers won't walk off the job, joining another 30,000 workers for Caesars Entertainment and MGM Resorts International, which also reached labor pacts with the union this week. The 3 companies were racing economic activity. Las Vegas is also scheduled to host the Super Bowl in February, raking in another $500 million. Charlie?
And that's Gina Cervetti. Wynn, which reported earnings last night, down now by 5.1%. MGM shares, they're up 1.5%. Those were our top company stories, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, where we update world and national news now with Nancy Lyons. Let's go to the Bloomberg 99.1 newsroom for that. Hi, Nancy.
Thanks, Joe. Dozens are dead or wounded from an Israeli strike on outpatient clinics at Al-Shifa Medical Complex in Gaza City. This is according to Palestine Authority Radio. The Israeli military has said that Hamas's main military headquarters is located underground near Al-Shifa and has told the hospital to evacuate patients. Israel is now implementing 4-hour humanitarian pauses for such efforts. Vice President Kamala Harris says she understands why people here in the U.S. have been protesting.
It's a very difficult time to see what has happened, particularly to innocent civilians, be they the 12 or 1,400 that were slaughtered as a result of the terrorist attack by Hamas in Israel, or the innocent Palestinian lives.
Harris spoke while in South Carolina to drop off paperwork for the Biden-Harris ticket in the state's primary, now the first primary for Democrats. Border security trumps wars in the Middle East and Ukraine in the latest Bloomberg News Morning Consult poll of swing state voters. We got more from Bloomberg's Wendy Benjaminson in Washington.
Now, a majority of them did say we want more funding for Israel and we want more funding for Ukraine, but 2/3 of them said we want funding for the border and to secure the U.S.-Mexico border and to do something about immigration.
Bloomberg's Wendy Benjaminson. The poll also shows swing state voters trust former President Trump over President Biden to handle both wars by double-digit margins. SAG-AFTRA's National Board is reviewing a proposed labor deal this afternoon with the Alliance of Motion Picture and Television Producers. If the board votes to approve the contract, it will be sent to union members for ratification. The deal, which is still considered tentative, ended the 118-day actors' strike Thursday morning. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
Nancy, thanks. We were talking the other day about this Washington Post story in which Donald Trump is preparing, if he were to be reelected, I guess, to target his political opponents, those who have wronged him. And he seems to have doubled down on that in an interview with Univision. Did you see this?
Yeah, talking about how as he has said often, the Justice Department has been weaponized against him.
Yes.
He's essentially suggesting that a precedent has been set.
That's right. Yeah. Listen to how he put it. Remembering we got, 4 indictments,
91
6 or 7
charges.
trials.
Well, when you include the civil trials.
Yeah, that makes it 7? 6.
So.
Here's the former president.
They've done indictments in order to win an election. They call it weaponization. And the people aren't going to stand for it. But yeah, they have done something that allows the next party. I mean, if I happen to be president and I see somebody who's doing well and beating me very badly, I say, go down and indict them mostly that would be, they would be out of business.
Go down and indict them. He says they let the genie out of the box.
To be clear, genie out of the box, not Pandora out of the box or genie
Right.
out of the bottle. It's the genie out of the box.
Could Pandora be in the bottle?
With the genie?
We asked Ty Cobb. Look, there was a Washington Post story the other day. Said he was going to go after Ty Cobb, among other people, the former special counsel at the White House. We asked him about it on Balance of Power. He didn't sound really worried, Kaylee.
I did represent the White House as an institution as special White House counsel, but I'm not sure what he wants to go after me for, but I'm sure that he will have a revenge-based administration if he gets elected. On the other hand, our current Constitution, to the extent it's honored, makes the mere fact that he has such a list a solid defense to anybody who's on it.
Business, finance, and tech
All right.
news as it happens.
I'm not sure who that is, but I think we need to say goodbye, Kaylee. I'm
That's
Joe
our
Matthew
cue.
with Kaylee Lyons, and that's The Hook. Bloomberg Business Week starts right now. Thank God it's Friday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and at Bloomberg Originals. It's Friday, November 10th, 2023. I'm Tim Stenivek. Carol Masser is out this afternoon. Jennifer Ryan is the editor of Bloomberg News' Equality team. She's joining us right now. Welcome, Jennifer. Good to have you with us.
Glad to be here.
It's good to, Bloomberg's a great place to work for many reasons, but one of them is because, first of all, we have so many awesome employees. We've worked together for years. I just met you today for the first time.
This is true. And look, I've seen your face. It's amazing.
Hopefully heard my voice too. But part of the reason is because you spent the last 20 years in our London bureau.
That's correct.
Okay, so tell us a little bit about what you covered there and, I'm guessing Brexit, some financial crises.
A lot of that. A lot of very, very, very big crises, which we are all still talking about. So I started off covering bonds, and then corporate bonds, then economics, and then I arrived just in time for the run on Northern Rock, and then followed by the run on Lehman Brothers, and then we all remember how that turned out.
Yeah.
And then, we were still dealing with the European debt crisis, and then the Brexit issue came up.
And then you were like, send me to the U.S. where it's boring and we have nothing going on.
And where there's nothing happening here.
Well, it's really good to have you with us this afternoon. We got a great program coming up. Stocks surging this afternoon. The S&P 500 up 8 of the last 9 sessions. We're going to have a great roundtable in just a few minutes. We're going to talk about the equity market, the bond market moves as well. Also, Veterans Day is tomorrow. It's the day that we honor military veterans of the U.S. Armed Forces. Though today is the day that it's being observed here in the U.S., we're going to check in with some of the executives of the nonprofit Working Nation to learn all about what they're doing to help veterans get back to work. We're also going to be talking about the most read story in the last 8 hours. The world's biggest bank has to trade via USB stick after a hack. This is a good one. Also, hopes of a U.S. nuclear renaissance are sinking. And because we're just a couple of weeks away from Thanksgiving, it's kind of an annual tradition here that we talk turkey with the CEO of Butterball. He's going to be joining us just a little bit later in the program. And how about we end the day with some salted caramel flavored whiskey? We're going to be with the co-founder of Duke and Dame is going to stop by. I wonder if they're going to bring any samples.
Fingers crossed.
Fingers crossed. Got to try it. It sounds too good to pass up. And it's the end of the day on Friday. I think we can take a few sips. First up, though, we are headed to our TV team because it is just about an hour until the close. So we're going to count everyone down to the close with the TV team here at Bloomberg. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Tim Stenivek and Jennifer Ryan filling in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and yes, Carol Masser, those folks still streaming on YouTube. What did you do with Carol Masser, Tim Stenovic?
I don't actually know where she is.
Yeah,
she just didn't show up.
Yeah,
yesterday or today.
She's got a lot of clout at this company, right? She just
can do whatever she wants.
She wants.
Yeah.
But it's a little cold to be out on the yacht, so I hope she's wearing a sweater.
Don't worry, she's hopefully not watching or listening right now. I don't know. One thing that I know she loves to talk about, though, and we love to talk about here, are those GLP-1 drugs from the likes of Eli Lilly and Novo Nordisk. We're talking about Wegovy, Ozempic, and the most recently approved
Don't forget
one.
Zepbound.
What did you say? Zepbound. Yes.
Zepbound, yes.
Rolls off the tongue.
Yeah.
So it turns out that employees are really interested in getting their companies to cover these drugs. I mean, they're very expensive. They range in price from about $900 a month up to over $1,100 a month. And the question is, are employers going to start paying for them at a time, Jennifer, when companies are, evolving what their benefits are looking like?
They're definitely always evolving their benefits and really looking for what employees are demanding. But I think what's interesting about this one, and this is what I'm trying to look into, is there's the potential for such healthcare cost savings with the reduction in obesity. So, I would think that calculus would play a very, very strong role in what companies are willing to shell out for this particular benefit.
Yeah, it would be nice, but of course we know a lot of companies don't always, do nice things. But maybe you can pair this up, Katie Greifeld, with the work from, because remember the hot desking thing was such a problem here?
Yes, that was
I see a solution, Katie, because I am about solution. And by the way, Katie just threw her hat in the ring to be CEO of another company, by the way.
Which one?
Of the Sphere, the Las Vegas Sphere. Come on.
So this is your chance, Katie Greifeld, to chart a path forward.
Is it because you just want to go to a U2 show? I mean, what's the deal?
I love it.
You love the whole Sphere?
The orb on the skyline.
Have you been?
No.
It looks pretty cool, doesn't it?
No, they don't actually let me leave the building, so I haven't made it out to the Sphere, but maybe one day when I'm CEO.
Okay.
Yeah.
There's another story too that I think we've been keeping our eyes on. It's not as sexy as Wegovy, Zepbound.
What are you talking about?
It's about closed-end mutual funds. Katie Greifeld picked this story here, so why don't you go for it?
I picked this story because
Sizzle us with closed-end mutual funds.
I wrote this story, so I want to talk about it. Again, it doesn't sound too interesting on its face, but closed-end funds, if you take a look at the discounts that they're trading at, on average, really they've been dropping across the board, particularly when it comes to muni bond closed-end funds. And this is interesting because there's two types of investors in closed-end funds. Basically, you have retail investors who invest. Then you have people who invest in closed-end funds hoping for some sort of mean reversion of those discounts back to net asset value. And then there's the activists in closed-end funds. And that's where it gets really interesting. You're thinking about the likes of Boaz Weinstein over at Saba, for example. And basically, all of the activists and closed-end fund investors that we've been speaking to have been saying, this is a great time to pursue this strategy, to pursue mean reversion, or maybe invest alongside those activists right now because the discounts are quite wide.
So, Katie, it's not often that we get to talk about a story that you actually wrote.
I'll talk to you anytime about a story that I've
So
written.
I'm going to use this as an opportunity to just interview you about it. I want to know how a story like this actually got on your radar.
I don't know if you know this, Tim, but I spend a lot of time on Twitter.com or X.
It's not called Twitter anymore.
Whatever you want to talk. But
Yeah.
so does Boaz Weinstein, actually. So he's been tweeting about it. In March, he actually tweeted about a trade that he was planning to make. And basically, it came to fruition. And I've just been following him on Twitter. And then we started talking to some other investors in closed-end funds, and all came together.
I will say it is among the most read on the Bloomberg terminal
Thank you.
today. But I have bad news. We're out of time to talk about closed-end mutual funds.
Nuts.
Yeah, I'm sorry. We're going to have to go.
Monday.
Don't worry, though, because we're going to be back together live on TV in less than an hour for our Beyond the Bell coverage. Not just on Bloomberg Radio and Bloomberg TV, but also, of course, on Bloomberg Originals and on YouTube. Don't miss it. It's coming up at 4 p.m. Wall Street time. We're going to take you through today's market close. front, we saw the data for consumer long-term inflation expectations actually hit a 12-year high. Economic concerns weighed on sentiment. And also, Federal Reserve Bank of Atlanta President Raphael Bostic said earlier today that policymakers can return inflation to their goal without the need to hike further. We've got a great roundtable in here this afternoon, not just to discuss rates, but also to discuss equities. We got Nora Melinda. She's equities reporter for Bloomberg News. And Michael McKenzie, rates reporter for Bloomberg News. They're both here in the Bloomberg Interactive Broker Studio. Nora, I want to start with you. Equities, I thought this was going to be a down day earlier in the day. But stocks just keep moving higher. The equity market, the S&P 500 up 8 of the last 9 sessions.
It is. I mean, we did see a little bit of a dip yesterday, but of course, this is coming after last week where that was the best week of the year. So we really are seeing traders purchasing stocks. We've got really tech rallying today. You'll see Microsoft at the top of the leaderboard throughout the day and into the close, but they really are taking on a little bit of a risk-on sentiment despite what, Powell and Fed speakers are saying throughout the day. We had Mary Daly speak earlier and then Powell yesterday, and both are, kind of giving off signs that potentially there could be a little bit more that needs to be done in regards to bringing inflation down. So interesting to see the market kind of taking a different approach versus what they're being told.
Yeah, I'm wondering if you can talk a little bit about the timing that we're looking at here. I mean, we're already talking about turkeys and salted caramel. So, I mean, how is that sentiment figuring into what you're seeing so far?
I mean, definitely with the consumer sentiment data that came out today, I found that to be pretty interesting, with like that being a 12-year high. And of course, we are headed into Thanksgiving. I'm super excited for that. It is just like, traders are really just purchasing specific shares. We are seeing, Apple and NVIDIA up right below Microsoft. And we do have a few names that are some decliners that, I'd love to speak to, but ultimately it seems to be a little bit of a positive sentiment, and it could be maybe some holiday joy.
I want to get to the decliners in just a minute, but first I want to bring in Michael McKenzie, who covers rates here at Bloomberg News, and talk a little bit about what we're seeing in the bond market today. Just give us an idea of what you're seeing, because we're seeing mixed moves on the front end versus the long end.
A bit of a positioning shakeout. Obviously, the dealers were left holding a huge amount of 30-year bonds yesterday, holding a quarter of the issue rather than the usual 12% of the issue they normally get.
Take us through what happened yesterday, because a lot of people are pointing to that auction as the reason for yesterday's sell-off.
Well, I think it was. It definitely was, because normally when you set up for an auction, the dealers get a sense of how much demand there's going to be. And this is why the pre-indicated level of where the auction was going to come was around 4.71%. It came in at nearly 4.76%. So that 5 basis point difference, it doesn't sound like a lot, but if you're a primary dealer and you're having to take down the Treasury, underwrite that Treasury auction, that's a huge miss for you. What it meant basically was that a lot of the pensions and insurers who usually buy the 30-year just didn't want to buy it. Or at least,
do we know why?
Well, I think because the market had rallied from above 5% last week back down to 4.70, and that was just too low for a lot of those buyers. So they stood back. It was a bit of a buyer strike, and because they clearly want to see higher yields. And in turn, the dealers then had to turn around and say, right, I'm holding 30-year paper, which is a lot of interest rate risk. I don't have the balance sheet capacity for that. I got to sell this into the market. I got to find a buyer. And obviously you find buyers at lower prices, higher yields. And so today we're back to roughly where the auction level was. So I think that was really what you saw yesterday, was just the dealers having to take down a lot of supply, indigestion, get rid of it. And then, of course, Powell comes along. And what happened was, what was so interesting about yesterday when Powell started speaking was the 2-year started selling off. So the 2-year yield went back above 5%, and it's still above 5% today. So that's where Powell's message kind of started to come home a bit. And we've seen the market take out some of those rate cuts they were pricing in last week after the payroll report. Came in a little bit weaker and softer than people expected. So the market's kind of getting back into some kind of a balance, I think, a better sense of balance.
One thing I'm wondering is, we're not ending the week on a happy note for that market. And so when we come in on Monday, do you have a sense of what the vibe might sort of be? Is this something that people can sort of reflect on the weekend and kind of shake it off a little bit? Or, is there some room more for further pain?
Well, the next big ticket item to come is the CPI report. That's coming out on Tuesday. And I think the market wants to see whether or not Powell and Mary Daly and other Fed speakers have been saying, hey, this fight to get inflation down is going to take time. We know that the economists who've been polled by Bloomberg expect headline inflation will drop for October, but the core rate, which excludes food and energy prices, is expected to stay high, relatively steady, but at high levels. That needs to come down. And I think the story for the bond market this year is that the economy's been more resilient than they thought. The idea of a recession trade that was really running rampant back in March when banks failed has been just completely wiped out. And inflation is sticky. And if that super core measure of inflation next Tuesday is sticky, it's going to be, okay, Powell actually and Mary Daly and others are right. The rates are going to stay higher for longer. And it means the real pain is going to be in those people who've been buying 10 years, 5 years, and even 30 years. They're probably looking at that. Those yields are going to head back towards 5% before everything's said and done.
Okay, so if those yields head back toward 5%, Nora, then typically what we'd see is some sort of sell-off in equities, especially equities that are, tech-focused or more of these so-called growth companies. It seems to be like there's been this disconnect between equities and the bond market lately.
Yes, and honestly, back to what you mentioned about this Thanksgiving, going into Thanksgiving, we actually had Bank of America's Michael Hartnett say that the market, in the equity market, while it has been selling off the past 3 months, it could be a switch to greed from caution. He actually said, quote, year-end greed. So, we are seeing traders still snapping up these shares. They're really buying and going out there in droves despite what's being said in the market. So I think it's going to be really interesting to watch as we approach year-end.
I think that point about year-end greed is really interesting because the other thing that's coming up is everyone's got to start buying their Christmas presents, year-end holiday celebrations, and I'm going to be watching really closely to see how those sales go. And I wonder if you have any sense of how consumer sentiment is going to interplay with this turn towards greed.
I do think that with the consumer sentiment data that came out today, I found that to be a little bit alarming as to where, the consumer might stand. And of course, they have still been feeling the pinch of inflation, but it does seem as though, from talking to different analysts, that the consumer is still ultimately holding up. So I think that we'll see how that dynamic plays moving forward.
I think we've still got incredible strength in the job market, and that's got to be explaining so much of what's happening here.
That's a really good point. It also makes the Fed's job a lot more difficult.
Right.
Although the last jobs report finally showed a little bit of softness, which I think really kicked off the rally in equities that we saw. Michael, back to you about this is a question that I've been grappling with over the last few days, and I haven't gotten to ask you this question, but I've asked so many other people. Over the last few weeks, we heard Fed speakers, including Jay Powell, say that the bond market was doing some of the Fed's job for it. The problem with saying something like that is then you come out and the bond market reacts in a way that, okay, well, yields end up coming down. And then if yields come down, then the bond market is no longer doing the Fed's job for it. What's going on?
Well, again, I look at someone like Chair Powell and go, you're basically the lion tamer at the circus. You've got the lions, which is the bond market.
Kind of felt like that yesterday with those protesters.
Yeah, well, he certainly espoused a certain sentiment towards them that leaves you absolutely without any question, doubt that what he thinks. But, so he's got a whip and he's got a pistol. And it's, used to cowl the other line, of course, is that the Fed's always been known as you got to jawbone the market. And this is why they have press conferences. This is why they make a lot of speeches. Some argue that probably the Fed talks too much. But at the end of the day, they're trying to communicate to the bond market, look, we want you to help us on this. You can't just assume that we're going to go and flick a switch and cut rates aggressively next year. Our mandate is inflation and employment. They clearly don't want employment to rise too sharply. They'd like preferably a softish landing. They may get that if you look at some of the recent productivity numbers that came out. But it's a difficult balancing act. And I think Powell, he was probably a bit too dovish in the press conference last week. So yesterday at the IMF panel, he comes out and is a little bit more hawkish. And it's just trying to calibrate, really.
It is interesting that the hawkishness didn't really last for today's session, though. Hey, Nora, we got like 20 seconds left. I want you to touch on a couple of these notable decliners that are in the S&P 500.
Okay, we've got Illumina plunging to a 10-year low after a softer guidance. We've got Disney slipping after its movie Deadpool and some other films are experiencing some release delays. And then we've got Wynn Resorts. It's performing well in Las Vegas, but not so much in Macau, China. So some metrics disappointing there.
A nice little roundup. We're going to be chatting a little bit later about Disney's woes when it comes to the new Marvel film that's in the current issue of Bloomberg Business Week. A big thank you to Nora Melinda, equities reporter for Bloomberg News. Also, Michael McKenzie, rates reporter for Bloomberg News, both here in the Bloomberg Interactive Brokers studio. It is Bloomberg Business Week. Tim Stenevec and Jennifer Ryan in for Carol Massar this afternoon, and this is Bloomberg.
Exactly.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. Stocks are pushing higher. Best level of the day right now. 39 minutes to go ahead of the closing bell. And this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. We have got the S&P 500 index above 4,400. A key mark seen by some chartists is a resistance level that would pave the way for more gains. But right now we have got the S&P 500 index at 4,409. That is a gain now of 1.4%. Dow Industrials up 345 points, up by 1%. NASDAQ is advancing 262 points, up now by 1.9%. 10-year yield 4.62% with a 2-year that's yielding 5.04%. Gold down $23 the ounce right now. We've got the precious metal at $19.36 the ounce, down 1.1%. A move higher today for crude, $77.32 on West Texas Intermediate crude. A busy week for Fed speakers, including market-moving remarks yesterday from Fed Chair Jay Powell, who said officials will not hesitate to tighten if needed. Subhadra Rajap is head of U.S. rate strategy at Societe Generale.
The real concern right now is that if financial conditions do ease, we saw 10-year yields and 30-year yields decline by nearly 50 basis points in the last week, then the tightening of financial conditions becomes easing of financial conditions. In that sort of scenario, the Fed would have to then hike rates to counteract the easing of financial conditions, and then it becomes a little bit of a vicious cycle.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Trade Desk shares plummeted the most in a year and a half after the digital advertising platform gave a weak revenue forecast. Trade Desk right now down by 16.5%. Snap and Pinterest, a couple of social media companies that also rely on ad sales, are also trading lower. Right now we do have Pinterest down by 0.8%. Snap, though, turning around. Snap up now by just about 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Kind of tough to find stocks that are moving lower on a day like today. We got more than 420 stocks in the S&P 500 higher, only 79 lower at this point. Check out the new Bloomberg Business app featuring Apple CarPlay and Android Auto. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs anytime. Just download the Bloomberg Business app on your smartphone and connect your phone to your car. It's free in the Apple App Store or on Google Play. Thanks to our sponsor, Interactive Brokers. Well, there's a lot to love about nuclear power plants. They produce carbon-free power. That sounds pretty good. They don't rely on fossil fuels that are subject to bad stuff like wars in Europe and the Middle East. And they also run at high capacity factors. So that means that they produce power more than 90% of the time. But as our next guest writes for Bloomberg Opinion, they also have a habit of blowing through schedules and budgets. The average cost overrun worldwide is 120%. That's according to a recently published analysis. And that's why less expensive SMRs, which stands for small modular reactors, they're supposedly easier to produce, carry a lot of hope, or at least they did until recently. Liam Denning is a Bloomberg Opinion columnist who covers energy. He joins us here in the Bloomberg Interactive Brokers studio. So Liam, nuclear was so hot in the 60s and 70s, and then people realized it took a really long time to build, and they had all these cost overruns. 3 Mile Island happened. And then, we start shutting them down all over the U.S. Then it turns out we replaced that power with fossil fuels. And that's not a good thing. So enter these SMRs. What's going on with these?
So small modular reactors have kind of come out of military applications. Things like aircraft carriers have run on them. And the idea is that big nuclear power plants take too long to build and they're too expensive because they're essentially bespoke projects. Whereas if you build these smaller reactors in series like you would in anything in a factory, you will supposedly get the cost down and gain efficiencies.
So like the Henry Ford version of an assembly line for nuclear reactors.
They'll be deployed more quickly. Now, the only problem is no one's actually deployed one commercially. I've been reporting on energy for the best part of a couple of decades, and I've heard about SMRs pretty much all that time. Now, having said that, there has been progress. There are several startups that are developing them. There is one company, NewScale Power, which has a design approved by regulators. However, that's the same company that effectively hit a wall this week when its flagship project in Idaho basically got canceled.
So I guess what's the bigger issue for investors with SMRs? I mean, you talked a little bit about in your column about the issues with the cost of financing and the higher cost of energy.
Yeah, I mean, look, I think the first thing to acknowledge is any startup in the energy space, particularly nuclear energy, is going to run into problems. This isn't a software app. You're dealing with real hardware, electrons or molecules that get moved around. Stuff is going to break. Stuff is going to be hard to build and deploy. So that's not terribly surprising. Nonetheless, if the problem you're trying to fix is that nuclear power plants take too long to build and they're too expensive and exposed to budget overruns, then it's not great if the solution to that also runs into delays and budget overruns. It's quite possible that we will build and deploy SMRs, but I think they face a problem which actually dogged the regular nuclear industry, back when it kind of fizzled out in the US after the 1980s. And that is, in all the time it takes to develop these things, the power market changes around you. And right now we're going through a period where power markets are changing in really quite fundamental ways, more than they have in the past century.
What do you mean by that, the power market changing? Are you just talking about the rise of renewables, or are you talking about something else?
It's basically the rise of renewables. There are other trends around, greater efficiency, which, efforts to conserve demand, which basically, messes with growth forecasts. But it's really the rise of renewables. And what they do, in short, is they effectively squeeze traditional power plants out of various hours of the day. The classic example is a market like California, where you have a lot of solar power deployed. And on some really sunny days, in the middle of the day, you don't need any other power plant. That makes it harder for the other power plants to recover their costs because they're not running as many hours of the day. Now, this is a real problem for nuclear power plants because they do not ramp up and down. You switch them on and you keep them running. And if they don't run 95% of the time, then it's going to be really hard for you to make your money back on them.
But so, given all these challenges, what is the potential role of nuclear power in a decarbonized economy and in an electrified economy?
It could have a big role. Don't get me wrong. It is a major source of decarbonized power. But I would say this. There isn't, to my mind, a single nuclear power plant that has ever been built anywhere in the world without some form of government backing, whether it's, utility rate basing or government guarantees, or as we're seeing in the UK at the moment, guaranteed prices for offtake, guaranteed by the government. So I would say if nuclear power is going to have a bigger role, it's going to be backed by the government in some way. And in a country like the US, that can be problematic. People generally don't like the government having a huge role.
And this is in an administration that's set out the most enormous pool of funding for green energy. And so if it can't happen here now, then what are the prospects next year, especially if there's a change of administration?
Well, there are other startups that are out there. There's the famous Bill Gates-backed one, TerraPower, that may well succeed. But I think they're still going to face this issue of what is the role of an inflexible form of power, which is what nuclear power mostly is, in power markets where increasingly the value is in flexibility, that ability to ramp up and put power into the market and also sit back as intermittent renewables take more share of the day.
Is there a realistic chance that batteries get so efficient that they'll be able to actually provide storage for those times from renewables, for those times that the sun isn't shining or the wind isn't blowing, and we will actually not need nuclear in order to move away from fossil fuels.
Well, I think the thing to bear in mind with batteries is we are seeing a lot of batteries get deployed, and the pipeline is quite phenomenal. But they fulfill a flexible role. I would say at the moment what they really compete with is gas-fired power plants. They're the things that can cover you for a few hours in the evening, as the sun's going down and you're trying to balance supply and demand. Where nuclear power can fulfill a role is we have to think about those periods where the wind dies down for 10 days at a time, or you're in deep midwinter and your solar power is really not going to perform that well. And there are other specialized applications that we're barely starting to think about at the moment. Things like the production of green hydrogen, the desalination projects in the Middle East.
I could talk about this stuff forever, Liam, so thanks so much for joining us. Liam Denning is a Bloomberg Opinion columnist who covers energy. You read his columns and more from Bloomberg Opinion at OPIN Go on the Bloomberg terminal, also at bloomberg.com/opinion. Liam joining us now in the Bloomberg Interactive Broker studio. Let's get a check on the latest world and national news. Nancy Lyons is in the 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Consumer sentiment has reached a 6-month low in the University of Michigan's latest survey. Bloomberg's Irv Chapman has more on the numbers.
Consumers expect more inflation ahead, Joanne Su, the survey's director, said in a Bloomberg interview. But also,
consumers are really being weighed down by high interest rates, increasingly telling us that buying conditions for cars, for homes, for durable goods are really terrible because of high borrowing costs. Most of the decline in sentiment that we're seeing right now is among younger consumers, lower income consumers.
Su said that even though the price of gasoline has moderated, consumers expect it will start rising again. In Washington, Irv Chapman, Bloomberg Radio.
Israel's ground operation in Gaza is focusing on Gaza City's main hospital, under which, Israeli officials say, Hamas has hidden a command center. Palestine Authority Radio reports dozens of people were killed or wounded by Israeli airstrikes on part of the Al-Shifa medical complex. Bloomberg Markets spoke with Mick Mulroy about the latest wave of fighting. He's a Marine who is co-founder of the Lobo Institution and now serves as a senior fellow at the Middle East Institute.
We're going to see an increasingly violent fight in Gaza City. It's already started, but it's far from over, and that objective of the Israeli Defense Forces is to destroy Hamas, and that can only be done up close and personal.
Mick Mulroy, who also served as a CIA paramilitary officer. Next Wednesday is now the date that's been set for a meeting between President Biden and Chinese President Xi Jinping. They face differences over the wars in Ukraine and Gaza, and they also disagree on technology and U.S. support for Taiwan. They're also expected to discuss the fentanyl crisis, which has been fueled by chemicals shipped from China to Mexico, where fentanyl is then manufactured. Global News, 24 hours a day. I'm Nancy Lyons.
Thank you. 24 hours a day. I'm Nancy Lyons. 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 24 hours
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street, 20 minutes to go ahead of the closing bell. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading above 4,400. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid today after yesterday's sell, with the Dow currently up 372 points. S&Ps are higher by 65, and NASDAQ is up 2%. The U.S. 10-year yield at 4.62%. Gold is down 22, is also testing its 200-day moving average. Oil is climbing, and Bitcoin is also higher today, gaining 1.6%. Among the main 11 S&P sectors, all were trading in the green, led by gains in tech and telecom, and leaders to the upside in the Dow, Intel and Dow Inc., while Merck and Nike led to the downside. After earnings, Diageo fell the most on record after cutting its outlook, and Illumina fell 8% to a 10-year low. In other news, Plug Power plunged 42% on a going concern warning. And wrapping things up, Microsoft rose 2% to its highest level since its 1986 IPO. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, time's certainly flying on this Friday afternoon. We got about 18 minutes until the close of U.S. equity market trading here in New York. You just heard the numbers from Charlie and Bill, but they are worth repeating. The Dow up more than 1% to reach 34,278. The S&P 500 higher by more than 1.5%, and the NASDAQ higher by a full 2 percentage points. Really eager what our Drive to the Close guest has to think about all this. Rob Hayworth is Senior Investment Strategist at U.S. Bank Asset Management Group. Good to have you with us this afternoon, Rob. What do you make of this rally? The S&P 500 up 8 of the last 9 days. Fed Chair Jay Powell not really successfully throwing water on it yesterday.
No, not quite yet, but I think some of the signs here, especially the strength in the NASDAQ, tells us that the market and investors are still worried about higher interest rates for longer, right? They may be taking Jay Powell a little bit at his word as they're looking for companies that are not going to be reliant on debt market funding for their future growth, and probably looking to companies that have more natural growth embedded within them. We're seeing more of a general rally today, but the leadership certainly speaks to that worry for us.
I mean, one thing I'm wondering is, looking at some of the stocks that are struggling today, like Diageo, you're seeing some price sensitivity start to emerge among U.S. consumers. I mean, what does that sort of tell you for the outlook for, these consumer-facing names to continue to plow ahead strongly?
Yeah, we're very much looking ahead to retail sales next week. I think the consumer remains a major question in all our outlooks, especially after we got consumer credit and the Senior Loan Officer Opinion Survey this week, which pointed out that, lending is down, and there's certainly some question as to what is the resilience left in the consumer after such strong data in Q3, right? Can they maintain it as they have to start paying back student loans and other things? And I think, as we look ahead into some of the big box retailers in coming weeks, that's something we're going to be paying close attention to because the consumer is front and center for what's going to drive the economy in 2024.
Yeah, I find that it can be just quite difficult to unpack consumer sentiment, because if you add to the student loan costs, you've also got massive child care bills that are going to be landing on people's doorsteps now that federal funding is dried up there. So there's so much pressure on consumers' wallets, but at the same time, the job market is incredibly healthy. So it's hard to know, do consumers feel rich or do they feel poor?
Right. Yeah, no, that and the sentiment surveys have made that difficult. Certainly, if we just looked at today's University of Michigan Consumer Sentiment Survey, you'd have to worry about that. But they may be focused on things other than just what's going on in their pocketbooks. Because as you dig into the survey, personal finances were something consumers felt okay about. It was more about the impact of higher borrowing costs and of that inflation could worry them in the future. So I think this is a little bit of a unique environment that we haven't seen in the last 2 decades in the economy, where we're getting fairly robust wage growth numbers. We're not seeing a lot of layoffs. I mean, the weekly jobless claims remain quite low at 217,000 this last week. So that labor market isn't quite as strong as it was, but it remains fairly strong, and that's giving the consumers some resilience, even if they're not quite happy with where prices have been headed.
But doesn't, Rob, that also make the Fed's job that much harder?
Yeah, absolutely, right. And I think that's why we're seeing, and we saw Chair Powell really emphasize holding rates higher for longer and looking harder and longer at the data. I think, as we're seeing it, I mean, they could be on hold well into the middle of next year, depending upon how the economic data unwinds. And there's room to see that, right? We're still working through the adjustment to borrowing costs. I mean, one of the things we look at is what is the average mortgage rate for existing mortgages, right? We know it's 7.5%, 8% for new mortgages.
I mean, what is it, sub 4%?
I'm sorry?
Is it sub 4%?
Oh, yeah, right. Existing costs are sub 4%. So that gives current homeowners a lot of room to still manage their budget, because their housing costs aren't going up quite as quickly as what it costs for new buyers. So I think that means that there's as is always want to be said, monetary policy works with long and variable lags, and I think we're seeing that the variance is longer this time.
Well, I mean, the Fed chair environment, at least when it comes to housing.
When it comes to housing, indeed, but then think about their car loans, think about their credit card loans and loans for any other kind of activity. Yeah. And like we've already been talking about, their student loans. So they are definitely feeling a pinch, but it's just not in the thing that's got the roof over their heads.
Yeah, what do you think? What do you think?
Not as quick, right?
Yeah, sorry, Rob, go ahead.
No, we're seeing that in the corporate market as well, right? Where companies that have borrowed money and their average maturities are out 10 years aren't having to come back to market quite as quickly as maybe some smaller companies where the term on their loan is 3 to 5 years. So they're having to bear those new costs a little quicker, and I think we're seeing that play out in the differentials within the equity market as well.
One thing I wanted to do, if I could switch gears a little bit in our chat about the equity market, is to talk about your thoughts on the big rallies that we're seeing in some tech names like Microsoft. I mean, do you think that this is, there look like some crowded trades perhaps? I mean, do you think that this is something that can continue, or is this still, we were talking earlier in the show about the shift to greed in the market, or is there still some legs there?
Yeah, I mean, having lived through a couple of market cycles, I'd say that we're not seeing valuations quite as stretched as we may have historically. And I think the constructive thing is this is being underpinned by earnings and actual growth in sales and revenue when we think about the push to cloud services, the push for artificial intelligence, the push for software as a service to increase and enhance productivity. So I think the constructive thing is, even though we've seen a tremendous rebound in 2023 after a horrendous 2022, there's still long-term room and long-term growth in these markets, because our economy and the innovation in our economy is being driven by technology and the distribution of technology throughout all sectors in the economy.
Yeah, it's just going to be interesting to see moving forward which of those companies are the ones that get that lion's share, especially, Jennifer, this year. We've seen, the quote-unquote Magnificent Seven really lead the way when it comes to rally on the S&P 500 and in the NASDAQ as well. Rob Hayworth, Senior Investment Strategy Director at U.S. Bank Asset Management, joining us on Zoom from Seattle. A big thank you to you for joining us for our drive to the close. As we do get a couple minutes away, just about 10 minutes away from U.S. market close, we're still seeing NASDAQ up more than 2%, the S&P up close to 1.6%, the Dow up close to 1.2%. This is Bloomberg Business Week, and this is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is set to challenge the European Union's fresh crackdown on big tech's dominance in the first of what is expected to be several appeals against the Digital Markets Act. The company will dispute the EU regulator's decision to put all of the App Store into the bloc's new digital antitrust list. An investigation is underway after ICBC, the world's biggest bank by assets, was hit by a cyber attack that left the Chinese bank unable to clear U.S. Treasury trades and forcing employees to send settlement details through a courier carrying a USB stick. And with more on the story, here's Bloomberg's Shonali Basak.
We've seen in fits and starts hacks like this before. For example, a electronic trading firm based out of Europe, really impacting the derivatives market this year. But if you look around everywhere you go, the financial industry is very concerned about more of these hacks. What if the Fed were to get hacked? What if the DTCC were to get hacked? What does that mean for really gumming up critical infrastructure in the financial system? As we saw yesterday, it affected prices in real time.
And that's Bloomberg's Shonali Basak reporting. T. Rowe Price shares are lower. T. Rowe Price says clients will likely withdraw more than $26.3 billion in the fourth quarter, extending a streak of redemptions by investors ditching actively managed mutual funds for cheaper products or cash money market holdings. Right now, T. Rowe Price shares, they are lower by 1.4%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is a Bloomberg Business Week. Good afternoon, everyone. Tim Stenevec and Jennifer Ryan in this afternoon for Carol Messer. One thing that you have to know about me, Jennifer, is that anytime there's a story about a plane, I'm going to click on it and read it. I'm like Charlie Pellet. I love airplanes.
Well, that's me and any home decorating story.
Okay, perfect. So we'll do a plane story now and then maybe a home decorating story a little later.
Fantastic.
How's that, fair? This one by Tony Capaccio really caught my eye. It's about a new U.S. stealth nuclear bomber. It's Northrop Grumman's B-21 Raider. Sounds intimidating. Conducted its first test flight. This is a key milestone in the $203 billion program that's meant to stay well ahead of China's technological advances.
So the Air Force is billing this as a really critical thing for its long-range strike capabilities. And the name of the game is to position the U.S. against China, which it really wants to stay one step ahead of, if not more, in terms of their technological capabilities.
One thing that is, and look, I'm a lay person, even though I'm really interested in this stuff, but one question that I would have for the Air Force is why it's still developing airplanes that have pilots in them, given the way that we've seen unmanned drones progress in the last 20 years.
Well, I would just hazard a guess, doubling down on the layman's perspective, is that we've seen also what's happening with self-driving cars. There is certainly promising technology, but it's taking a while, and that's just getting somebody automatically to the grocery store. So I think there's barely a bit more sophistication in that sort of market there.
That is a very good point. Let's talk about some of the numbers behind this. The B-21's average procurement price per plane has remained below its $550 million target. That's per plane, mind you. That's measured in fiscal 2010 dollars. If adjusted for inflation, the equivalent is about $692 million when it comes to fiscal 2020. We should note that it's on track for delivery to Ellsworth Air Force Base in South Dakota in the mid-2020s. 6 test aircrafts are being made now on the same production line that will be used for combat-ready aircraft. That's a process, Jennifer, praised by lawmakers and the GAO because it improves manufacturing and cuts down on costly retrofits. The reason we're talking about this is because there was this video posted of the B-21 on social media by the aviationist that showed it streaking at low altitude across a clear blue sky, its engines roaring, accompanied by a conventional fighter jet. We have that link in here. Don't go anywhere, though, because we're joined by our TV team in just a minute for our countdown to the close right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day.
Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovic, Jennifer Ryan in today for Carol Massar. Welcome to our audiences across all of our Bloomberg platforms as we count you down here to those closing bells, Tim. And this is a pretty good day here. 1.5% on the S&P, 2% on the NASDAQ. That big dip that we saw yesterday that had put that rally on pause, that's now a thing of the past.
Did everyone just forget about what Jay Powell said yesterday? I mean, is that what's happening here? I don't know.
Did he say anything different than what he said on November 1st?
No, but I think hawkish tilt is the term that a lot of people are going with. We did speak earlier to Rob Hayworth over at U.S. Bank Asset Management. He made a really interesting point about the companies that are doing the best today, the companies at the top of the S&P 500, the mega-cap tech companies. He said that shows that investors are still worried about higher rates for longer because they're buying companies that aren't necessarily reliant on the debt market for funding for their future growth, so they won't necessarily be subject to those higher rates, Jennifer.
I know, and it's a very tricky calculus for a corporate treasurer because, you know, you're kind of getting two different things. On the one hand, you had a little bit more dovish tone to the Fed minutes, and now we've got Powell and some other Fed officials coming out and trying to tamp back on that. But still, we've got to look ahead to retail sales. We've got inflation numbers next week, so that could help give a clearer picture.
Yeah, I was trying to take a look, too, at kind of just how much conviction was behind some of the moves that we've seen in equities. I mean, this is a broad-based rally on the day, but when you really add it up on a weekly basis here, you're really talking only about a third of the names in the S&P 500 are actually posting a gain on the week. Remember, those first 3 days of the week, even though we were in the green, there was relatively tepid gains here. So the strength that we're seeing here on this Friday really just kind of clawing us back, I think, to kind of where we were about a week ago. The Dow Jones Industrial Average is going to finish out the day higher, up by about 1% or about 390 points and change. The S&P 500 higher by about 68 points or 1.6%, and an official close above 4,400, 44.15 and change, which is also above that 100-day moving average. Meanwhile, the NASDAQ Composite higher by almost 300 points or 2% on the day. And for once, the Russell 2000 decides it actually wants to play along, up 1% on the day.
All right, well, this is pretty broad-based, at least in the S&P 500. Peeling back the layer there, Scarlett, you see 436 stocks in the S&P 500 higher today, only 65 moving lower. I feel bad for whoever's doing decliners, Scarlett.
Yeah, that'll be me later
That's
on.
you, okay.
I look at the New York Stock Exchange, almost 3 stocks higher for every one that is lower, and that is pretty much reflected in the industry groups as well. Chip companies are the best performers on the day and for the week as well, up about 5.5% this week. Software services and autos, that's really Tesla, bringing up the rear in terms of the best 3 performing groups. In terms of laggards, because all the industry groups are higher, food, beverage, and tobacco, telecom, and pharma. So the more traditional defensive sectors are not doing as well today.
All right, let's take a look at what's going on in terms of gainers today. I wanted to highlight Microsoft shares hitting an all-time high today, up 2.5%. The company having its best day, at least price-wise, highest price, going all the way back to 1984 when it IPO'd. Shares now trading at $369 or closing at $369.67 today. Let's talk about the best performer on a percentage basis. Microsoft on a points basis is the best performer. The best performer on a percentage basis today is Hologic, the diagnostic products company. It reported fourth quarter revenue and adjusted earnings per share that beat Wall Street's estimates. Investors sending shares of the company up by 7.3%. And then let's take a look at NVIDIA as well, because that company, among the mega cap tech companies that are leading the rally today, we saw Microsoft higher, we saw Apple, Amazon, Tesla, Meta Platforms, all among the biggest gainers on the S&P 500. NVIDIA finishing the day higher by close to 3%. It's now up for an 8th straight day. Sounds like a lot of days in a row, but weirdly, it's only its longest winning streak going back to March of this year.
All right, let's take a look at some of the decliners. It wasn't too hard to find because the ones that fell by a lot as investors continue to punish companies that don't do good, that don't make good on their forecasts. Illumina was the worst performer in the S&P 500 after the DNA sequencing company cut its full-year sales and profit outlook for a second straight quarter, off by more than 8%. PowerPlug, the hydrogen producer, falling as much as 46%. That is the biggest drop in a decade. Investors questioning, or I should say Plug Power, investors now questioning whether the company can survive without additional funding after it issued a warning as a going concern. At least 5 analysts downgraded the stock afterwards. And Trade Desk, this is something that Romain highlighted yesterday when we were looking at earnings. It's a digital advertising platform giving a fairly weak forecast for revenue this quarter, raising concern, of course, about the health of the ad market overall. The CEO said that Trade Desk saw reduced spending around cell phones, media, and entertainment starting in October, although it has recovered a little bit for this month. But we also saw declines in Snap and Pinterest, which rely on advertising sales, falling in response to what happened at Trade Desk.
Yeah, let's take a look at what's going on in the Treasury space because, of course, we did see a lot of volatility on the week. On the day here, it was definitely a bit more subdued here. You take a look at the 2-year yield, which was higher by about 3 basis points on the day. But remember, on a weekly basis, we're about 21 basis points higher than where we were a week ago. Similar moves for the rest of the curve here, which actually shifted down on the day. That included a 10-year yield down just ever so slightly, your 20-year down just about 2 basis points, and your 30-year down by about 3 basis points. But once again here, I believe with the exception of the 30-year, all of the main points across the curve are higher on a weekly basis.
Yeah, I think the question that it brings up is sort of what happens next week, everyone. When we're thinking about what Jennifer said earlier, retail sales, we get a good idea of what the consumer is feeling and experiencing because we got a couple important companies in the consumer space reporting next week. Walmart and Target are reporting, so we'll get a good idea of what Americans are spending their money on. And then, of course, we get the economic data next week when it comes to retail sales, Jennifer. That will help us get a good understanding of that too.
Yeah, it'll be an interesting one to watch because especially where are they spending their money? Are they shifting more of their holiday spending towards the food and the stuff that really makes the traditional holiday? Is there going to be a lot of love for things like decorations, which aren't going to last the season?
Yeah.
A lot of what? Come on, that's blasphemy. You have to spend money on decorations. What's the point?
What, you recycle your decorations?
Well, sometimes, and we buy new ones. We're very festive in our household.
I don't doubt it.
Yeah.
I'm thinking
about
the
invitation to the holiday party yet. It's so weird. I never get these invitations about these festive things.
He's always saying to check the mail.
Okay.
Home Depot is also reporting next week. So to Jennifer's point about what people are spending their money on, we know that during the pandemic, it was on your home and on everything related to freshening up your home because suddenly people are spending 24 hours inside their home. But going forward, the big question is if people aren't moving out of their homes and they're kind of stuck there because the housing market is frozen in place, how are they spending in that way?
Yeah, you know, Scarlett, you can also buy Christmas decorations at Home Depot, too.
Yes, you can.
You know, and other sort of
I thought they only
things.
sold skeletons that were like 10 stories high.
No.
They do Christmas
Have you been to,
decorations
you know,
too?
there's a Home Depot right next to Bloomberg World headquarters here.
I
You can
know.
do all your holiday shopping there, I guess, depending on how much you love the person that you're shopping for here. But, you know, there's something for everybody.
Maybe a garbage disposal or something,
don't take
fire
advice. Don't get your
extinguisher,
wife in it.
fun gifts like that.
Bad idea.
Yeah, not a great idea.
Not that I'm speaking from experience.
Hey, we actually are interviewing the CEO of Butterball a little later in the program.
The turkey company?
Wow.
Yeah, the turkey company.
Okay.
Yeah. Do you guys know how much turkey prices have gone up?
Yes.
You do?
Yeah. Well, I mean, just anecdotally, yeah. I mean, at the store?
Well,
I don't know the percentage, Tim.
They're actually the same price last week that they were 1 year ago last week.
What?
Really?
According to the USDA.
Oh.
So a little bit of relief for consumers.
Are they giving away
$1.14 a
free
pound.
turkeys this year? Because I remember last year, a lot of stores were using turkeys, either free or heavily discounted turkeys as kind of loss leaders to get people in the door.
Free turkey.
Yeah, free turkey.
I can't get my head around that.
Yeah, I don't know. I mean, nobody eats turkey any other time of year, so I don't know.
No, that's not true. Cold
Not
cuts.
true.
Cold
Yes.
cuts, right?
There we
Turkey
are.
sandwiches?
There we are.
I don't believe it.
$10.99 a pound.
I refuse to believe that anyone eats turkey outside of the holidays.
Romain, you don't get out enough.
All right. So Romain, when's that invitation coming to the holiday party?
There's some supply chain issues, Tim, but they will, I guarantee you, it's getting to you. Yeah.
All right. That's what happens. All right. Do we have to go?
I think so, Tim.
Okay. I think I'm being told.
This is normally when Carol does that, but she always forgets.
You know who else? We're also having some salted caramel whiskey on later.
Yeah, sorry, guys.
Of course.
So,
What are you doing on radio? Is this what happens in November on radio?
Jennifer, you're sitting next to, I mean, all they do is really just do wine and whiskey segments for that matter. And food
on
segments.
Fridays, it's kind of how it
And
works.
that's all it is. So you're just living the life of Riley over there.
Yeah, well, don't tell anyone.
Yeah.
How does turkey pair well with this whiskey?
I don't know. They just give us tap water here on set, so we don't get any.
Pairs well with everything.
All right, guys, that is going to do it for Beyond the the bell, our cross-platform coverage of the market close on Bloomberg TV, on radio, on YouTube, and Bloomberg Originals. Meantime, catch us same time, same place on Monday. Have a great weekend, everyone.
Take me through the night. Break down, not spinning it. Can you see? Break down, so.
Well, on Thursday, trades handled by the world's largest bank in the globe's biggest market traversed Manhattan on a USB stick. We're talking about Industrial and Commercial Bank of China's U.S. unit. It had been hit by a cyber attack, rendering it unable to clear swaths of U.S. Treasury trades after entities responsible for settling the transactions swiftly disconnected from these stricken systems. It's a Bloomberg exclusive, and we got Catherine Cat Doherty with us right now. She's finance reporter at Bloomberg News. It's amazing that she's in here because every time I've walked by a TV over the last 24 hours, Catherine, you've been on the TV talking about this story. I want to start 24 hours ago because you were working on this.
Yeah,
it broke like at the end of our show yesterday.
Mm-hmm.
What happened here?
I have to be honest, it even started earlier than that. I wish that we could have, but we were trying to digest what was going on. So I'll take you back to the morning, like 9 a.m. We were just starting to hear about disruption in the Treasury market. I cover market structure, and I was starting to hear from market makers, from the banks, about just liquidity in
Wait,
in
is
the
this
Treasury
related to the
market.
auction yesterday?
So it wasn't necessarily related to the auction. It was just the liquidity in the overall market. It was later in the day. So trading was happening, and it wasn't as if no one was able to trade. That would have been like a systemic across the board. People would have been a lot more frantic. But you could tell there was something that was wrong, and we quickly tied it to ICBC, and we were just trying to figure out, okay, what is this system disruption, and could slowly start piecing everything together to eventually lead to the conclusion that this was in fact a hack. And this doesn't happen every day. I know it might seem like hacks are happening every week. When you see headlines like this, it does cause concern. And I've been getting a lot of questions of, is this just happening more and more frequently? And I would say no. There was another major hack earlier in the year in the derivatives market, but that didn't happen last month. That was about 8 months ago. So this is unusual. And a lot of people are saying, oh, well, our system's just getting worse. I also would not say that. In fact, everyone that I talk to within the financial system, especially at like the big banks, they always talk about the money that they are spending to improve their systems and to enhance the security to avoid situations like this.
I mean, this is just the thing. We are not unaware of the possibilities of hacks in very key parts of the financial sector. And so I'm trying to think about it from the perspective of a regulator. You know, nobody ever wants to see this, but leaving this aside as maybe perhaps a one-off, is there a sense that the rest of the system is pretty well protected?
You know what's hard when you're a regulator? You have all of the bodies that report to you that you regulate, right? So you can set out rules that they abide by, and those people abide by the rules, and the rules are supposed to essentially be a safety net. But everyone outside of your regulatory body, and they might be third parties that work with your constituents, they might be the ones that are vulnerable because they don't have to abide by the same rules. So that is the issue. And the CFTC, when there was the hack in the derivatives market, they started to revise some of their own rules, and they're even coming out later this year that are specifically targeted at just this issue. It's saying not only do you have to have your systems, but you are responsible for keeping track of the third parties, the folks that you're working with on a day-to-day, to make sure that whatever they're doing doesn't impact your business.
It's like getting them to focus on the weakest link in the chain, but throwing out the net of their authority that wide seems like just an insurmountable task.
Right. I mean, they can't possibly be responsible for everyone outside of the core constituents in their marketplace. And so what they're doing is they're making sure that those people, the people that report to them, are just more aware of the ripple effects. So again, the even if it's someone that think about today, I was just talking with someone for the ICBC situation about their emails have been down, and you think this is such like a, you know, if you're texting someone or you can pick up the phone and get in touch with someone at ICBC, but an email, if you're trying to trade and your trade isn't happening and you're just like, hey, what's up? And this email isn't going through and you're not even getting a response, like, you know how we sit here and if you get a response that says, oh, I'm out of the office, you're like, oh, that's the answer. But if you're not getting any response because their email system is down, that's what creates chaos.
So I wonder how we then get to the anecdote that you put in the story that is the most read on the Bloomberg terminal in the last 24 hours, the last 8 hours, I should say, about the USB drive actually being used to handle trades.
Yeah, so this is a little inside baseball, but and this is exclusive reporting that you're hearing just on radio because we haven't even really sussed this out in our written piece. It's now become clear that USB didn't really work to the extent that it wanted to, because it was carrying and it's not just one. This is just the concept, right? So much data was trying to be transported through a USB that it's not going to do the same job as what is normally supposed to happen. However, I want to caution by saying it's not as if the entire market was relying on this one USB. It was just specific trades it's data that was through ICBC that they had, and it had kind of been a backlog. Basically, they wait till the end of the day to report all this data, and they put the data on this USB drive to essentially make sure that things could settle by the end of the day. And I don't think all the settlements, I know all the settlements did not go through.
It's like a heist movie where they're transporting the diamond and it's in some guy's backpack and not in the Brinks armored vehicle going down the road.
I got asked today if this USB drive was transported via a bike. And I was like, I don't know, could have been an Uber or the subway.
It could have been in someone's pocket.
Right, or someone could have walked down the street.
Imagine being the person having to carry that. Hey, I just want to take a step back here. On our program, we don't often talk about ICBC and the role that it has, not just in China, but here in the U.S. So give us some context here.
So they stepped into it. It's fascinating that this is coming to light now, given the news, because it was, I think, back in 2017 that I was starting to read the story about when ICBC stepped into the Treasury market. And you're right to point it out because it's not a U.S.-based firm, and they do play a role in the Treasury market. It's U.S. Everything is about it is U.S.-based. So this is kind of like it's creating a question mark in a lot of people's minds of, is the fact that it wasn't a U.S.-based firm a reason that this happened or that it was targeted? And I don't think anyone has come out and said that as a fact. It's just these are questions that are raised. But in the Treasury market, I would also say that overall, the folks that I've been talking to since yesterday keep emphasizing that it's not as if they're handling a small portion of a very, very large market. So while there's disruption, I want to caution, and I use the word disruption because it's not as if this is a complete, what would be a more dramatic word. It's as if you got a cut, but you're not having to go get stitches. It's not like a deep, deep wound.
That's an interesting way to put it. And just really quickly, there was a line in your story about the role of cryptocurrency or lack thereof in the ransom that could have been levied against the bank. Can you talk very quickly about that?
So Lockbit is the organization that was responsible for this hack. They were also responsible for the hack I mentioned earlier in the derivative space, interestingly, and with other industries. They're industry agnostic. They're not just going after financial firms. But they often use crypto as a form of when they ask for the money, the ransom, to eventually, hopefully, resolve the situation. They just want money. They want that in the form of crypto because they can't then, no one can track that money. Then they can take it. Eventually, they might be able to convert it, but it's not as easy to say, oh, that is Lockbit that took over and that's tying the money. Essentially, you're able to do it incognito.
We have like 10 seconds left, Kat. What's the next step in the story that you're going to follow over the weekend and early next week?
Resolution. We're not expecting it to be by the end of the day. We don't an announcement saying, oh, everything is back to normal and all good. Very unlikely. But by Monday, I can expect that. I was talking to someone today and said, good thing this didn't happen Monday, because my goodness, it would have been the full week, I think, of disruption.
Well, congratulations to you and the team on a fantastic series of stories. Bloomberg exclusive, most read in the last 8 hours. Check it out. That's Kat Doherty, finance reporter at Bloomberg News.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, with the Dow, the S&P, and NASDAQ all advancing today. But we begin with a developing story. FBI agents have seized phones and an iPad from New York City Mayor Eric Adams as part of an investigation into his campaign fundraising, and this was confirmed by his attorney. Now, the seizures happened after an event Monday night, according to a statement from the mayor's attorney, Boyd Johnson. The seizure of the devices, first reported by the New York Times came days after federal agents searched the Brooklyn home of Adams' top campaign fundraiser. We've got more on this coming up with our Nancy Lyons. Wall Street did advance today with the S&P 500 index closing above 4,400 at 4415, up by 1.6%. The Dow today 391 points higher, heading into the weekend at 34,283, up by 1.1%. NASDAQ up 276 points. That was a gain of 2%. 10-year yield 4.62% with a 2-year yielding 5.04%. Spot gold 19.37 the ounce, down 1.1%. And West Texas Intermediate crude up 2.2%, 77.38 for a barrel of WTI. So again, recapping, stocks advanced. S&P 500 index extending its November rally, up another 67 points, up 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Right, thank you so much for that update, Charlie Pellet. Check out the new Bloomberg Business app featuring Apple CarPlay and Android Auto. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs and podcasts anytime. All you got to do is download the new Bloomberg Business app on your smartphone and then connect your phone to your car. It's CarPlay. You know how it works. It's free in the Apple App Store or on Google Play, thanks to our sponsor, Interactive Brokers. Well, Bitcoin has just been on a tear. I'm actually pulling it up right now because, fortunately or unfortunately, it trades 24/7. It's up for the last 5 days in a row. It's right now trading at $37,380, its highest since May of 2022. And our next guest actually thinks that Bitcoin still has more room to run, betting it'll increase 50% next year. John Wu is president at Ava Labs. The company is developing the blockchain Project Avalanche, which it calls the, quote, fastest smart contracts platform in the blockchain industry, and touts it as, quote, fast, low cost, and eco-friendly. John joins us now for our weekly look at crypto right here in the Interactive Brokers studio. So, John, before we get to the crypto market and your calls, I do want to touch on the Ava Labs news that we got this week. Our own Bloomberg News team here reporting that Ava cut jobs by 12% this week in a restructuring. We should note it's just the latest layoffs to hit the cryptocurrency sector. What can you tell us about this restructuring?
Well, that's right, Tim. And, that day was probably the toughest day in my 4 years at Ava Labs. But in the last 4+ years, we've gone from 10 people to 270 before this 12%. And the world has changed. Like any fast-growing business, you have to assess where the market is, what kind of products you're building, and analyze it, and then make the necessary changes. So it was very tough. I call some of those people my friends, but it was necessary. And the team is leaner, and I've got 240 people still that I have to think about.
So is this it for cuts for the next year or so?
It was a one-time thing. That's it. Okay.
Yeah, I guess one thing, though, if you could just pull back and talk a little bit about the market for Bitcoin so far this year. I mean, there's just been this resurgence. Is that going to continue? Are we going to see a Bitcoin ETF?
Oh, I mean, that is obviously the rage. I mean, so first, the surge in the Bitcoin prices. Keep in mind, I'm an operator, but I used to be a fund manager, so I keep a lot of perspectives in mind. It was really two things. Recently, you've had call it uninverting of the yield curve from a macro perspective. You had also announced that there would be less supply in treasury auction sales. So that created a backdrop from a macro perspective that was very positive for risk assets, and crypto included in that. But on a micro perspective, you had, I think you called it on your own show, exuberance for these ETF potentials. I think we're getting closer to the reality of one of those. And reality is, I think a lot of these institutional managers are trying to get ahead in anticipation of that.
How are they doing that? Just by buying Bitcoin? Or, I mean, how do you get ahead of that?
Yeah, I mean, I think they are buying, well, if you look at the volumes, where they're coming from, if you are doing it on centralized exchanges like a Coinbase, or are you doing in a decentralized exchange, which is on-chain? Typically, the crossover investors, the institutional hedge fund types, they do it on-chain. So you can do it either through Coinbase, or you can do it through proxies. Those are basically Grayscale's product, and you also have other proxy products out there, trusts like that, and you have certain stocks that you can buy it. So if you look at that, you would say that it was more crossover, traditional people getting ahead of the ETF announcement.
How much do you think Grayscale is spending on marketing? Because you cannot go into an airport in the New York City area or the Washington, D.C. area and not see an ad for GBTC?
Listen, when you have 30 billion in assets and you charge what they charge, you have decent, marketing budget.
Do you think they're also doing marketing to get ahead of that, to gin up interest ahead of a spot Bitcoin ETF?
They've been very consistent in their marketing even before this. Part of their job is also to proselytize asset managers, and they've been very good at it. I know those guys well. They've been doing it for more than 5-6 years.
Yeah, one thing, just to go back to the outlook here. I mean, you mentioned this link between a risk-on appetite and demand. What's the chance that that risk-on appetite is going to continue into next year? I mean, we've certainly got a lot of macro feedback that that's not going to be the case.
Yeah, I mean, everything is likely, and it's a volatile asset class, so anything can happen in the short term. But if you look at it over the course of the year, Bitcoin's actually a lot better than most tech stocks. It's up something like 200 to 300, somewhere between 200 and 300%, literally 200 or 300%. You can't even tell you exactly unless you're really studying it day to day. So actually, over the longer period of time, it's still doing relatively well. Can it go backwards? Sure. And I wouldn't even be surprised. People have bought in anticipation of the news and then sell it on the news, so to speak, of an ETF release. But just think about it. BlackRock has 10 trillion in assets. So, if 1% of their distribution picks up on this, that's 100 billion. 100 billion, the Bitcoin ETF, Bitcoin market cap, I think, is about 700-ish. So it's like 14% increased demand, and that's only 1% of just BlackRock. You have Fidelity, you have other big players involved. So over time, it'll still continue to have positive inflows.
Okay. And then just to continue on with the sort of sentiment around the market at this point, can you explain a little bit about how the implosion of FTX is landing in terms of getting new customers in, people sticking with the asset class?
Well, obviously, when it happened, the FTX scenario, it was literally about a year ago. Mm-hmm. Everything changed. The market structure of the asset class really deteriorated. A lot of players left the system. I think what's good right now, a year later after the trial, is that people are saying, okay, it's almost there where we can put this chapter behind us and move forward. So I think the fact that we can put this chapter, or closer to putting this chapter behind us, we removed a lot of bad actors, is all viewed positive going forward.
I saw last week, I believe it was last week or the week before, Jennifer, correct me if I'm wrong if you know this, that we saw another person accused of being a bad actor in the crypto space by the Southern District of New York. Like, this was an actual, complaint. Where are we in weeding everybody out?
I think we're farther along than people realize. There are bad actors. I mean, I've been in this space for a while. This space has been a petri dish of genius, experimentation, and frauds and scams, unfortunately. Regulatory rules are different in every part of the world, and they're frankly uncertain, so it allows the bad actors to come in and try to take advantage of things. But what is happening with this ETF potential, as well as, again, I'm an operator. Ava Labs is actually a software services company helping people build on Avalanche. The partnerships and the business development relationships we're building with professionals tells me professionals are coming into the space. There's new leadership coming, and it's frankly nice to see a blend of great technologists working with domain experts, whether that be traditional finance or the stuff we're working on in Asia with gaming companies or loyalty rewards programs.
Yeah, I mean, that's my next question for you, isn't it? It's the industry developing and more professionals coming in. What's sort of the vision in terms of pursuing that with corporate partnerships?
So the vision for Ava Labs, again, the software service, just like Red Hat was for Linux, is to help people deploy things on top of Avalanche, create real business use cases for traditional companies as well as crypto native companies. So giving them product market fit, getting them business use cases. Stablecoins was a perfect example. I think that is the real first thing in blockchain or Web3, if you will, that has established product market fit. Brevin Howard's research said there was over 11 trillion on-chain settlement in stablecoins in last year. That's the same volume, almost the same volume as Visa over the course of a year. So my prediction, for next year, 2024, is you're going to have the same volume as both Visa and MasterCard in terms of stablecoin settlements.
You guys
on-chain.
profitable over at Ava Labs yet?
Ava Labs is a profitable company, yes.
Going public? What's the plan?
We're a
20
little bit
seconds.
away from going public, but we are profitable for, it depends, because the accounting rules are a little bit tricky, to be fair, but we are cash flow positive. How about that?
Cash flow positive. Okay, so not profitable, but cash flow positive.
Yes.
Okay. All right. Really appreciate you joining us. John Wu, president of Ava Labs, the company developing the blockchain project Avalanche. You're listening to Bloomberg Business Week. We're in the Bloomberg Interactive Brokers studios in New York. Let's get a check down on the latest world and national news. For that, we go to Nancy Lyons in Washington, D.C., where we find her in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. FBI agents have seized New York Mayor Eric Adams' phones and iPad. This happened earlier in the week on Monday night. This is according to the mayor's attorney. The New York Times has seen the search warrant and says the seizure is connected with a federal corruption investigation into whether Adams' campaign conspired with the Turkish government and others to funnel money into his campaign. Adams' attorney says his client has not been accused of any wrongdoing. Earlier this month, the mayor's chief fundraiser had his electronic devices seized by the FBI. The White House says President Biden and Chinese President Xi Jinping will discuss a range of regional and global issues when they meet next week in the San Francisco Bay Area. Today, it was announced their meeting will be held on Wednesday. Gordon Chang, author of The Coming Collapse of China and an expert on U.S.-China relations, says there's little that the U.S. will gain in this meeting.
We've been talking to China intensively for more than 3 decades. And during this time, China's behavior has only deteriorated across the board. So I don't think there's anything that Biden can say that hasn't already been said.
Gordon Chang says the Chinese need a lot from the U.S. right now because their economy is ailing and there's pessimism among the public. He says Xi will likely ask Biden to signal to U.S. businesses they should remain in China. Vice President Kamala Harris traveled to South Carolina today, where she filed the Biden-Harris campaign's first batch of paperwork for the state's Democratic primary. It's now the first in the nation primary for Democrats.
I am here to say, let's do it again. We will do it again.
Harris spoke at the headquarters of the South Carolina Democratic Party in downtown Columbia. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story. The United States outlook has been downgraded to negative from stable by Moody's. That headline right now on the Bloomberg Professional Service, repeating the headline, U.S. outlook downgraded to negative from stable by Moody's. The Dow, the S&P, and NASDAQ all advanced today. S&P 500 index closing back above 4,400, up 67 points, higher by 1.6%, now at 4415. The Dow up 391 points, up 1.1%. The NASDAQ Composite Index up 276 points, up today by 2%. 10-year yield 4.63% with a 2-year at 5.06%. Spot gold down $21 the ounce, down 1.1% to 1936. And West Texas Intermediate crude oil up 2.2%, 77.42 for a barrel of WTI. Bottom line here, the Dow, the S&P, and NASDAQ all advanced today as stocks extended their November rally. So what about the market backdrop? Rob Hayworth is Senior Investment Strategy Director at U.S. Bank Asset Management Group, and he was a guest right here on Bloomberg Business Week.
Some of the signs here, especially the strength in the NASDAQ, tells us that the market and investors are still worried about higher interest rates for longer, right? They may be taking Jay Powell a little bit at his word as they're looking for companies that are not going to be reliant on debt market funding for their future growth, and probably looking to companies that have more natural growth embedded within them.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Trade Desk shares plummeted the most in a year and a half after the digital ad platform gave a weak revenue forecast for the current quarter. Shares down 17%. Snap and Pinterest, social media companies that also rely on advertising, traded mixed today. Snap up 0.7%. Pinterest down 0.7%. Recapping stocks higher, S&P at a 7-week high. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really, really appreciate it. Jennifer, hard to believe it, but Thanksgiving is less than 2 weeks away. Are you going to be here for Thanksgiving?
I am.
Yeah?
And I'm not doing any cooking.
I was just going to ask. You knew where I was going. We're going to go visit our in-laws in, where am I going? I'm going to Cincinnati.
I'm going to Connecticut.
Oh, okay. Well, you get to drive. I have to fly. So, yeah, I kind of envy that. It's the worst time of year to fly. Okay, so these figures that I'm going to cite right now are dated because did you know that on every Friday, the USDA comes out with a turkey national retail report? And when I did the research for this segment, the retail report I was looking at was from Friday, November 3rd, and it showed no change in the price of a turkey between last year and this year. And then I pull it up again right now, and now I have the November 10th one up, and it shows that we actually are seeing turkeys a little bit more expensive this year than last year.
Interesting.
Yeah.
I had thought there was a glut. That's something I had heard, but
I know
what do
someone.
know?
I know someone who has been talking turkey for more than 20 years. We love having him join the show because it's kind of a Thanksgiving tradition to check in with him. The CEO of the turkey company Butterball, Jay Jandren, is with us right now. He joins us on Zoom from Butterball headquarters in Garner, North Carolina. So Jay, good to have you back with us. What are we getting wrong when it comes to the way we're looking at these turkey prices that come from the USDA here?
Well, we really have to get through the entire holiday selling season to get a true picture of that. And the reason for that is you've got a lot of heavy discounting and feature activity from the retailers during the holiday. So it's really a matter of timing, exactly when they pull the data. And once you get through the entire holiday, so you see exactly what's sold and at what prices to get a real accurate picture. But overall, you'll see pricing is going to be about the same as it was last year.
How closely do you follow these reports from the USDA?
We do pay attention to those. And of course, those are things that we look at when we evaluate the holiday, what the sell-through is like, what the consumers purchased, what our retailers are telling us as far as their overall sales. So it goes into kind of a bigger picture for us to really look at next year and how we're going to approach next year's holiday season.
I wondered if you could give us a little bit of insight in what retailers are telling you. I mean, we had our colleagues talking a little while ago, and one of them was mentioning that at one point he saw some free turkeys floating around some retailers, and I couldn't get my head around that. But I mean, is that something that you're seeing at all?
You know, each retailer has their own strategy on how they go about that. And some do giveaway turkeys with a certain amount of sale in the basket. Some heavily discounted. It's really all over the board, and they're all looking for ways to help get that shopper into the door. So they'll try things new each year to see what works for them, and or sometimes if they feel the strategy is working for them, whatever that strategy is for their stores, they'll stick with it. So it's all over the board. We don't even know really up until the time that the prices are released as well on what they're going to be. So we're certainly paying attention to those prices and those retails as well.
So how important is Thanksgiving to your business? I mean, give us numbers here. Just like how many, what percentage of sales do you do during the month of November versus year round?
Well, it's certainly a big part of our business, but it's not all of our business. We have over $1 billion in sales, and this represents a good portion of that. But what we really look at is within the holiday. I'm sorry?
Over 50%?
No, much less than 50%. But what we look at is particularly is how we sell versus other brands and other products in the case during that period of time. And one of the important facts that we look at is, or the measures we look at is, the Butterballs, one of every 3 turkeys sold in the retail outlets is a Butterball. So that's the number we pay real close attention to, what that market share is every year, how it goes up or down, and how it adjusts throughout each holiday season.
So looking away from the holidays, I mean, just to help us get a better sense of how your business is operating, where's the big sources of demand for the rest of the year?
Well, it really comes in our CPG products, our consumer packaged goods, maybe in our ground turkey products that we sell throughout the year. We also do a lot of business in food service as well. So that's a big portion of our business. They go to restaurant chains or to food service distributors who are selling to mom and pop restaurants. And then we have a portion of our business that's international as well. So it's pretty well diversified.
Well, one of the reasons we like having you on around this time of year is not just to prepare us for cooking Thanksgiving turkeys, but also because you guys do a survey each year when it comes to understanding consumers for the holidays. The surveys have been a little interesting over the last few years because of the pandemic, but it seems like a theme this year in the data that you found at Butterball. We're sort of seeing this return to pre-pandemic activity. Talk to us a little bit about what you found.
We are, and that's great news. Yeah, everyone is finally kind of over the COVID stuff, and celebrations are back to what they were pre-COVID, which is great. You've got more people in households now celebrating together, an opportunity for friends and family to get together, which is fantastic. So we're really happy to see that those levels come back. And the good news for us is that turkey will be at the center of the table as it has been year in and year out. So turkey sales are expected to be very good this year. People don't break too much from tradition. I mean, they're gonna celebrate like they did in the past, and that means that turkey will be on the table for sure.
Yeah, that's one thing I wanted to ask you is how stable is turkey as a centerpiece of Thanksgiving?
It is stable. It varies very little year in and year out, and we were really curious to see what would happen during COVID as well. And what we found there is that sales were very, very good. It was just a little bit different. We had less larger size turkeys sold and more smaller because the gatherings were smaller because people couldn't travel and get together like they would otherwise. This year, we're seeing more people at the table. So we're expecting you'll probably see a few more sales of larger turkeys this year.
How early do you have to plan for to anticipate demand? I mean, it seems like you have to plan for this a year ahead of time.
Well, that's exactly right. As soon as this holiday is done, we're producing product for the next holiday season. So it is a year-round production cycle for us. And it gets a little tricky, to try to understand what our retailers are going to be looking for each year. We spend a lot of time talking with our customers and sharing the information that we have from the holidays, so they have a good expectation of what they think they need for the next year as well. So it really begins in earnest. As soon as the Thanksgiving meal is over, we're producing more product and talking to our customers for next year's holiday already.
All right, Jay, we got 20 seconds. Are you answering any of the phones at the Turkey Talk line this year? No, I won't. I'm going to leave that to the experts. Those folks certainly know what they're doing, and I'm going to let them do that. But I did get a chance to visit with some of them last week
at an event we had in New York City with partnership with Bumble for Friends that we did, and we had some of our top line hosts there, and it was a great opportunity to share our stories.
Jay, always great to chat with you. Jay Jandran, Chief Executive Officer, President of Butterball, joining us right here on a Bloomberg Business Week from Garner, North Carolina. Happy Thanksgiving, Jay. You're listening to Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Honda Motor will be hiking the pay of some U.S. employees by 11% following the UAW's historic contract victories of the carmaker's unionized Detroit competitors. This according to a company memo that was seen by Bloomberg. A Honda spokesperson did confirm the pay raise. Honda shares, the ADRs, up today by 2.1%. The UAW's high-profile strike and record-breaking contract wins are boosting the union's efforts to organize at non-union firms. You can add win to the settlement list. 3 Las Vegas casino companies have now reached labor deals with the city's most powerful hospitality workers union, ending the threat of a strike in one of the nation's hottest tourist destinations. And with more, here's Bloomberg's Gina Cervetti.
Charlie, Culinary Workers Union Local 226 said it reached a tentative agreement for a new 5-year contract contract with Wynn Resorts. The deal means 5,000 workers won't walk off the job, joining another 30,000 workers for Caesars Entertainment and MGM Resorts International, which also reached labor pacts with the union this week. The three companies were racing to agree on a new contract ahead of a Formula One Grand Prix scheduled to begin November 16th and expected to bring 100,000 visitors and generate $1.3 billion in economic activity. Las Vegas is also scheduled to host the Super Bowl in February, raking in another $500 million. Charlie?
And that's Gina Cervetti reporting, and Wynn shares after earnings today lower by 5.7%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Jennifer Ryan in this afternoon for Carol Masser. Let's go from New York City to Washington, D.C. now for a check on the latest world and national news. We've got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Treasury Secretary Janet Yellen says she had candid, direct, and productive discussions with China's Vice Premier Hu Lifeng. The two met in San Francisco over the past 2 days as part of the Asia-Pacific Economic Cooperation Summit. Officials say they discussed topics ahead of next week's summit planned for Wednesday between President Biden and Chinese President Xi Jinping. Yellen says they want to work toward common solutions.
We do not seek to decouple our economy from China's. This would be damaging to both the U.S. and China and destabilizing for the world. But a healthy economic relationship requires American workers and firms to be treated fairly.
Yellen says she's also planning to travel to China next year. Israeli forces have Gaza City's main hospital surrounded. Israeli officials say a Hamas command center is underneath that facility. The UN's High Commissioner for Human Rights, Volker Turk, says Israel must be careful with its strategy.
We have very serious concerns that these amount to disproportionate attacks in breach of international humanitarian law. Strikes on hospitals and in the vicinity of hospitals in Gaza City have been particularly intense.
The UN's Commissioner for Human Rights, Volker Turk, is also calling for an investigation into Israel's bombing campaign in Gaza. Also today, we learned the number of Israelis killed last month is now 1,200. That's down from 1,400. Officials say the other 200 were probably terrorists. Well, less than 7 million people watched the third Republican presidential primary debate Wednesday. The audience for the NBC-hosted broadcast was down from the 9 million who watched the debate last month and the 12.8 million that watched the first debate. The fourth Republican primary debate will be held on December 6th in Alabama. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Tim and Jennifer.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Okay, so you sent this story to me a little earlier, Jennifer. It's about Peter Luger, the legendary steakhouse here in New York City, where I believe you only can pay in cash, gift certificates from Peter Luger, or the Peter Luger credit card, I think. I don't know. I haven't been there. I haven't been there to eat. I've been there to buy gift certificates for friends, but...
I've seen the outside of it, and that's as close as I've gotten.
All right, well, maybe we should do a broadcast from Peter Luger.
Let's do that.
In Vegas, not in New York.
Let's also do that.
So we're talking about this because, as our own Kat Odell points out, Peter Luger Steakhouse is open for business in Sin City, providing its famed butter-bathed porterhouse and ribeyes to carnivores who are visiting Vegas.
Yes. Do they get the same amount of butter? This is what I would like to know.
Are they known for they're known for their butter, right?
I think they are.
Yeah, cash only. They're cash only.
They're cash only. But then it's got to look pretty Vegas-y, I would imagine,
yeah,
in
it
this
looks
new place.
Different than the no-frills, cash-only Brooklyn flagship, where they're known for their brusque service and always crowded tables. Okay, so there's the sheer volume of steak on site. They've got, let's see, 14,000 square feet. That's the footprint. 20% of new restaurant alone is dedicated to a lower-level dry aging room that's filled with USDA prime beef.
And the cost of that? Over $1 million worth of beef.